Hey everyone, welcome back to VCHQ. I'm Alex, your host, and today we're going to be diving into the exciting world of AI-driven asset management with Qraft Technologies. I recently had the opportunity to interview Francis O, APAC CEO of Qraft, and I'm super excited to share his insights with you today. First, let me give you a quick overview of Qraft. They are at the forefront of applying artificial intelligence to asset management, particularly the public equities market. They've launched several ETFs, including Qraft, which I personally bought into to track its performance over time. Let's start with Mr. O's fascinating journey in the financial industry.
I joined the Craft technology around 4 years ago. Not exactly four, around 3 year and 10 months ago. I joined the Craft Technologies. It was my first time working in the AI company and the startup. I used to spend my career in the asset management industry over 15 years, around the 15 years before I joined this Craft. So I used to work at the Vanguard, working as a head of Korea. The coverage for the South Korea's institutional and intermediate clients. And I also used to work at the Direction, another US asset management company, providing leverage and inverse product to the market. And I started my career at the Mira Asset Global Investment Korea, taking the bunch of different roles from the marketing, fund managers, and risk manager, etc., etc.
With such extensive experience in traditional asset management, I was curious how Mr. O looked at the evolution of AI in finance. He drew an interesting parallel to the adoption of ETFs.
When I first entered into the ETF industry as an ETF fund manager, that was 2011. Back then, the kind of a feedback from my clients or friends, they were asking, "What is ETF? Why should I buy that? There's a lot of mutual fund. ETFs are it's complicated. I don't like it." So that was kind of a very typical first impression feedback when I speak with my clients. But think about today, 2024. ETF is dominating the industry. People are just it was just taking time to embrace the new technologies and the new initiative in the market as well.
This evolution seems particularly relevant with the recent advances in AI. So I asked Mr. O how the release of ChatGPT has impacted the industry.
Indeed, yes, certainly. From my point of view, the OpenAI's ChatGPT 3 that was released in late November in 2022, if I remember correctly, that increased the general understanding of AI from my audience a lot. Is at least like a 3 to 5 years of the education is just solved by the using the ChatGPT. So that is a opportunity for someone like us, like Qraft Technologies, but at the same time, it could be a threat as well. What I mean by a threat is the target audience or potential client prospects, as their understanding of AI is increasingly increased, and it means that their expectation level is also increased as well. So what we used to do is we used to operate the AI modeling and processing internally, the back then. But right now that is maybe not enough for us. What we are doing right now is we still on the model by ourselves, but at the same time link our model into the large language model, so that able to be much more interactive in terms of the client solution facings.
Given his extensive experience in the traditional asset management industry, I was curious about his perspective on the current state of the industry and where AI fits in.
And then this industry has been primarily managed and then developed by all the humans. And there has been a lot of overhead cost in terms of the hiring the most expensive or the most kind of prominent fund managers for the market, etc., etc. So, in some sense, ironically, the asset management industry is definitely the field of uh, the scale business. At the same time, there are the inefficiency in terms of how to delivering or the generating the alpha out of the market. And what I'm believing is the using the artificial intelligence, it will automate it a lot of the current existing process able to find alpha and then delivering strategy much cheaper, much scalable way. And I don't think why the industry or the clients are not using AI generate investment idea.
This insight into the industry's inefficiencies is particularly interesting. Mr. O elaborated on how different financial institutions are approaching the adoption of AI.
There are the show adopting artificial intelligence in asset management or the finance industries is still in the foot of the mountain in general. So every institution has a different idea how to applying it. So some organization they think about, okay, let's use AI for the internal productivity growth. For example, like the building up the information management system or the knowledge management system for their in-house employees. Some other guys are think about like, okay, let's try to build an AI for the client interfacing the tool, such as the leveraging large language model to developing the chatbot, which is acting like the experienced salesperson to able to communicate with their clients. So to build a scalability. And some of a few camps like us, Craft Technologies, where we want to apply is we want to utilize artificial intelligence and leveraging its predictive power into the financial market.
You mentioned different approaches for AI adoption, but why is it that larger institutions have a tough time adopting and implementing artificial intelligence?
They are building the teams in-house internally. And one interesting observation for me is even though they set up the in-house team, adoption is so slow because think about you are the sitting that the in-house AI initiative team, then you do your own researches and a lot of different simulation and testing and then the sharing findings to other team members, all the human-driven fund managers. They have millions of reasons to not accept that AI initiative teams.
Qraft has shown impressive growth since its founding. So I asked Mr. O about Craft's approach to scaling.
So the startup has a different stage of development usually, and I think the first stage could be kind of a problem setting. And then trying to solve it as much as possible, bring up the first MVP to the market, and that is usually starting the point. And right now, the Craft Technologies, we have 8 years of the business record. It is hard to call us as a startup right now. It's a kind of a transition period to the startup to corporates. As the organization grows or the number of employee grows, and then our client the basis grow, etc., etc. So um, in our the stage for Craft Technologies right now, where I'm focusing is uh, the first thing is survival. Yes, every other the company they need to survive the generating revenue, and at the same time also need to build up the very strong value proposition to the market as well, and uh, where we can do in the current market timing, what I believe what we can do is the become the industry standard of the how to apply AI into investment process. So I do not want to the leave our craft technologies as just one of the providers to the markets. What I want to do is to set a standard, either stock selection or asset allocation or the other types of the investment strategy. I want to be the standard to the market.
Their growth has been particularly impressive in terms of client acquisition.
Where myself and my team focusing right now is to build more and more reference cases through the active commercial, the partnership through our client. So right now we have around 35 each of the financial institutions are using our model. For at this stage, it is hard to say that we are in the taking either some substantial share in the market, but the stage of where we have 100 lots of the financial institutions are using our model, then I think that that could be maybe some fair point for me to saying that the craft is building the standard player in this industry.
One of the biggest challenges in AI driven asset management is explaining the decision making process. Mr. O shared their approach.
The biggest challenge is okay, I get the AI, I kind of understand your model, then what is the rationale? Or your model is making this specific decision making. And people always want to know the reason. the why. Whether it was good or the bad, the reasoning is important because people inherently they do not like to invest in something they don't understand, right? It could be same to you as well. But one issue for the AI is a naturally the black box,
Right.
especially if you're using the deep learning model. Then how he wants to kind of changing that black box into the gray box. It cannot be the white box. That is the where we spend the most of time either using uh, the XAI, which is the explainable AI, some of the techniques we can utilizing, but at the same time also the domain knowledge of the who used to work in the finance industry, trying to interpret the model's output to human version of the interpretation is needed.
When it comes to funding and partnerships, Qraft has taken a strategic approach.
We are currently in the computer Series C, the funding. And last round, the main investor was a SoftBank Group. They investing 146 million. So in terms of cash, we are abundant, frankly speaking, for now. We are in the cash bleeding at this moment, but at the same time, it's not concerning at all. But that is kind of investment for our the future growth. Um, and the stage like us, where we are the most needed is the VC or the P who understand our the vision and our growth, the stories, and able to participating as a the strategic investor instead of just finance investors. So money itself is not necessary for us, but where we need a partner is those who are able to echoing our vision at the same time accelerating the business growth by either the providing the reference to us or the kind of building the business together, etc., etc. So we need the business partner as a VC in our stage.
Beyond just funding, they're looking for strategic partners.
There are two different type of the business model we are pursuing at the same time. One is the revenue generating, like the size deal of a kind of $10 million deal plus minus. That is definitely the impactful for our company. But at the same time, sometimes that kind of deal are not scalable to either to other clients or the other or either to other jurisdiction. So in case of the asking for partnership through the VC or the P is uh, the most important thing is let's say just a hypothetical case. Let's say the one of the VC has the very good relationship with their LP, and the LP is a kind of endowment or the pension fund, etc., who are very willing to adopt the AI model into their decision-making process. Then, if the VC, the see the value for craft technologies, and then their willingness to the introducing us back to their LPs, the building up the actual business cases. That could be, I believe, the win-win cases the both VP, for both VC and the someone like us
Looking into the future, Qraft is working on some fascinating projects.
in-house. What they're doing right now is um, something like we call as AGII, artificial general intelligence for investments. So that is the way we want to do, and the primary the foundation for that research idea is uh, the continuously developing and training the large language model, and then let the large language model is acting like a human and then making investment decision. And there's some interesting project we do right now is the trying to replicate the hedge fund manager's investment strategy. We work with one of hedge fund manager in South Korea, and then kind of partnership with them, and then able to collect the historical the trading patterns, and then their investment philosophy, which is written in the unstructured data way. Also, their in-house kind of research commentary and the meeting note, etc., etc. Aggregate all the information and then train our model to wait and see how close that AI model may make a decision like a human. So yeah, so that could be also one of the interesting side project for us.
I was particularly interested in Mr. O's perspective on AI's role in the future of the market.
It will take long enough time. It will take long enough time. I mean, for investors to making investment decision, there are so many different factors affecting their decision making. Humans are heterogeneous, very diverse, and then it cannot be just one dominant investment idea is will be prevailing the market. I don't think so. AI is so diverse as well, same as human. It's all heterogeneous, based on the what data they're using, how the AI model is architectured, and then how it trained, etc., etc. So even though the AI potentially be the primary player in the market, but that will be the term of aggregation. In every the separate AI, it will the working very diverse. For example, like some are maybe the 100% AI driven, and some are still the human and AI hybrid version as well. So there will be the room for the human.
This conversation with Mr. O provided key insights into the future of AI and asset management. Here are some key takeaways. First, the adoption of AI in finance is following a similar pattern to ETFs, with initial skepticism giving way to widespread acceptance. Second, explainability remains a crucial challenge in AI-driven asset investment strategies. Third, strategic partnerships and the right kind of funding are essential for scaling AI companies in finance. Fourth, the future will likely see a diverse ecosystem of AI approaches rather than a one-size-fits-all solution. Fifth, human expertise and AI capabilities will continue to complement each other in the investment world. What do you think about the future of AI and asset management? Do you have concerns or are you excited? Let me know in the comments below. And if you're interested in the intersection between finance, technology, and venture capital, hit that subscribe button. And until next time, this is Alex from VCHQ signing off.